Hey everyone, it's Coach Tom from Money Wealth Coaching. In this video, we're going to cover the ins and outs of your credit report and credit score, how they work, how to improve your score, and a way to protect it from identity theft. Let's talk about a credit report. It's a list of all the financial companies that you've done business with, past and present. It lists how much you owe them, when you started with them, and how well you're paying them back. A credit score is a numerical value of your credit report ranging from 300 to 850. It takes your history from the last 7 years of all your financial transactions you've done with your creditors, which are the people that you owe, and calculates a number called your credit score. The better the history, the higher the score. A credit score is similar to your grades in school. You earn a separate grade for each class in school, which is submitted to the school. With a credit score, each creditor reports your history similar to a grade to the credit agency. Your overall GPA in school is the average of all your individual class grades, which is similar to what a credit score represents, which is a calculation of all your transactions with each of your creditors, good or bad, for the last 7 years. Sticking with the GPA analogy, if you end the year with an A or a 4.0, your credit score equivalent would be between a 760 and an 850. If it was a B or a 3.0, your equivalent score would be around a 680 to a 759. If it was a C or a 2.0, the score would be around a 620 to a 679. And if you had a D or a 1.0, your score would be under 620. When you apply for a credit card, a car loan, or a mortgage, the financial company is going to look at your credit score to determine whether they will give you any money or credit. Some landlords, insurance companies, and utility companies may also look at your score as well to see if they want to do business with you. If your score is high, 760 to 850, you will most likely get approved and get the best interest rates available. If your credit score is poor, below, let's say, 620, you will either get denied or get a really high interest rate because you're a very high risk of not paying them back. So who do these financial companies get credit information from? There are 3 credit reporting agencies that collect information from all your transactions: Experian, Equifax, and TransUnion. Each of these agencies use one of 2 different scoring companies, FICO or Vantage Score. When you apply for new credit, the company will get your credit report and score from one of these 3 agencies. In general, the score from each credit reporting agency should be within 10 to 15 points of each other, so you don't have to worry about whether it's a FICO score or a Vantage score. It really doesn't matter. So that's the background of what a credit report and credit score is. Now let's talk about how to increase or maintain your credit score. The great thing about a credit score is that there is no final grade. You have the ability to raise it over time. So let's get started with raising your credit score. First, you need to know where you're at. If you haven't checked your credit score in a while, you'll want to do that. There are a few places you can get your credit score for free. Credit Karma and Credit Wise from Capital One are just a couple. You can also check with your credit card company to see if they'll give you access to your credit score for free. If you find your credit score is low, you'll want to pull your credit report from all 3 credit agencies to see if there are any errors on your report that you can dispute. By law, you can get your credit report for free once a year from annualcreditreport.com. These reports will not have your credit score, but at this point, you already have it. If you find any errors to dispute, go to the credit agency website and submit a dispute. Once you sign up for a service that will automatically give you your credit score for free, you can monitor it to see how your progress is going. Now that we have your credit score and made sure that there are no errors, we're going to work on improving your score. I'm going to simplify the process down to 3 factors. There are some other minor factors that affect your score, but these are the three main ones. The first one is an on-time payment history. This one will contribute the most to your credit score. If you pay your loans and credit cards on time, you will have a higher score than if you miss the payment. Your payments need to cover the minimum amount due, needs to be processed by your lender by the due date. If you make a plan to pay your payments on time every month, your credit score will go up over time. Another factor that affects your credit score is what's called credit utilization. What this means is how much of the available credit you're using every month. If you have an available credit on your credit card that is, let's say, $2,000, and you owe $1,000 on your credit card, you have a 50% credit utilization rate, which will negatively impact your credit score. But if you have a $10,000 of available credit and you owe the same $1,000, your credit utilization rate is 10%, and this is a positive impact on your credit score. A utilization rate lower than 30% is good, but a utilization rate of less than 15% is ideal. However, a 0% rate will negatively affect your score because you aren't using the credit cards at all, so the scoring companies have no data to use. You can change your credit utilization by asking the credit card company for a credit line increase, but please only do this if you are paying off your credit cards every month. You don't want to get into more debt. The last item that affects your credit score is the length of time that each account is open and in good standing. A newly opened credit card will drop your score a little bit, but will recover fairly quickly. A card that has been on your credit report for a number of years will positively affect your score if it has a good payment history. If it doesn't, that's okay, because your new on-time payments will help overcome the mistakes of the past. If you are no longer using the credit card that has a long history, leave the account open as long as there are no fees associated with the card. These are the three basic steps to improve your credit score. One of the ways you can protect your credit and avoid someone else opening up accounts under your name is applying a credit freeze on your credit report. All three of these reporting agencies give you the ability to freeze your credit, but you have to go to each individual website to do so. The first time, it'll take you about 10 minutes total because you have to set up a login and confirm your identity on each website. After that, it's a very quick process. Go to these three websites that are on your screen. A freeze on your credit report will not allow any new credit accounts to be opened on your credit report. If you need to open up a new account, you can log into each agency's website and thaw your report. Freezing your report can take up to a day, but thawing your credit will only take about an hour. This is a great way to protect yourself against some identity theft. As the old saying goes, time heals all wounds. You need to start paying at least the minimum payments on time every month. Reduce the amount you owe on your credit card compared to the available credit, and do this for a long period of time. When you do this, your score will go up. Good luck on your adventure. This is Coach Tom from Money Wealth Coaching. Please like and subscribe if you enjoyed this video.